this question. When was the last time you paid your taxes? Be honest. If your answer is, let's just say a few years back, then this video is for you. What is up, everybody? My name is Tyra, and I am here to teach you everything you need to know about 1099 taxes. Here on this channel, we create resources for freelancers, independent contractors, gig workers, and anyone else who files or should be filing business taxes. Now, I don't want you guys to feel bad about not paying your taxes for the previous year. Falling behind on taxes is not the end of the world, but it's not the best either. The penalties can get steep if you wait too long to pay up. That's why you should get caught up as soon as possible. And I am here to help you get back on track. So let's get into the video. When you don't pay your taxes on time, they become delinquent. Now, when we talk about delinquent taxes, there are two questions that everyone really wants to know the answers to, but are just afraid to ask. Will I go to jail for not paying my taxes? And will my bank account or passport be frozen? So let's break it down. No, you will not go to jail. Probably. Jail time only happens in extreme cases where actual tax evasion has occurred, meaning you did it on purpose, like Al Capone. Falling behind for a few years due to life, anxiety, or just plain old spaciness isn't great, but it doesn't make you a criminal mastermind. So you're not going to get locked up. As for your passport and bank account, the answer here is also no. Again, this only happens in extreme cases that involve large tax bills. We're talking more than $55,000 due, and where the taxpayer is actively evading the IRS. To put it plainly, as long as you cooperate with the IRS when they come looking for their money, nothing like that is going to happen. If you work with the IRS, they will work with you. Since we've gotten those pressing questions out of the way, what actually is the worst that can happen if I don't pay on time? Worst case scenario for most people is civil penalties, aka extra money owed. And they are based on your unpaid tax that is due. So if you don't actually owe any taxes, you're in the clear. But there are two types of penalties. The failure to file penalty, which is when you don't send your tax paperwork, and the second is failure to pay, which is when you don't pay the taxes that you owe. The failure to file penalty is 5% of the unpaid tax up to 25%. So let's say your tax bill is $100. The penalty for the first month overdue would be $5. The highest penalty you would pay for these overdue taxes, no matter how long you wait to pay up, is $25 because of the 25% penalty cap. Bear in mind, interest will continue to accrue on the unpaid balance, including penalties, the longer you wait. Now, failure to pay is 0.5% of the unpaid tax per month, up to 25%. Just like the failure to file penalty, interest will continue to accrue until the balance is paid, and there is no limit on how much interest is charged. As you can see, the failure to file penalty is a lot steeper, which is why it's always worth to at least file your taxes, even if you are unable to pay the balance due. It's better to owe an extra 0.5% than an extra 5%, right? And we have the perfect app for you to help you quickly file your taxes. Introducing the Keeper app, your one-stop shop for keeping track of all of your business expenses and tax filing. My personal favorite thing about the Keeper app is that it automatically categorizes your expenses for you. And if you would like some automation in your life, look at the description box below and click on the link to get started today. Now, this is the worst case scenario, but there are other possible repercussions as well. We're going to touch on 4 of them. Number 1, if you wait longer than 3 years, you lose out on your refund, even if you're rightfully due one. The IRS gets to keep all of your coins, y'all. And I don't know about y'all, but we don't have time to be giving the IRS money that is not theirs. Number 2, there is an increased audit risk. The longer you wait to file, the more time the IRS has to gather information about your tax situation and build a case to investigate you. Usually they have 3 years to audit a return once it has been filed. After that, the statute of limitations kicks in and they have to leave it alone. But that 3-year clock starts after you file. If you don't file, you're just pushing it back and giving them more time to look into you. Number 3, the IRS can also file for you. Now, while this may sound kind of good, this is actually really bad. If you wait too long, the IRS will just take the records that it has and send you a bill. They'll do the least for you when it comes to your write-off, so you will end up overpaying. And lastly, there is paper filing. The IRS doesn't accept electronically filed tax returns going back further than 2 years. Once you miss that window, the return has to be paper filed, which is usually more work and it costs more to do. So Tyra, you've given me all of this information. Now, what do I do with it? How do I get caught up on my taxes? Hold up, don't worry, I got y'all. So taxpayers fall behind and catch back up all the time. The IRS makes this path back to redemption as easy as possible. Taxpayers, like you, can request what is called a tax transcript from the IRS for their missing documentation. The transcripts will show all tax forms filed under your tax ID number. So W-2s, 1099s, interest statements, tuition statements, and all of that kind of stuff. You can just go online and ask for one of these transcripts, and they're all free. And one thing to note, when you are preparing your tax returns from years back, be sure to use the forms under the right year. If you're filing a 2016 return, you need to use a 2016 Form 1040. If you plan to use a tax software, be sure to buy it for the right year. And this seems like a small thing, but these forms can change and you don't want to hold up your taxes any longer than you have to because of an incorrect form. Now, we've got our delinquent tax forms ready and we filed and it's time to pay. But because of all of the penalties and fees associated with your filing, you can't pay. So what do we do? If the tax bill is too big to pay all at once, it is very easy to apply for a payment plan with the IRS. The plan can be included with your tax return when you file. It can also be done online and you can set up auto pay directly with the IRS, specifying when you want them to take the payment and how much you want them to take. This is actually a very accommodating feature the IRS offers. You could also request to have your penalties waived. If this was a first-time offense or you had a reasonable explanation for being late, like a family death or medical emergency, you can ask to have the penalties waived. The IRS is surprisingly understanding when you try to work with them. If you've sent in your old returns and signed up for a payment plan to get back on track, they'll probably cut you some slack on the penalties. And the last thing you can do if you can't pay your bill is to haggle. Believe it or not, if you can demonstrate that you're genuinely unable to pay, the IRS will accept your best offer. This is called an offer in compromise. So if this is you, haggle for your life, honey. Now, I know I just gave you guys a mouthful, but I truly hope this helps you get caught up on your taxes. In the comments below, let me know if you found this video helpful. If you would like more easy to digest tax content, make sure you give this video a like, and if you have not already, make sure you hit that big red subscribe button down below, and make sure your notifications are on so you can stay up to date with all things self-employed taxes. Thank you guys so much for watching, and I will see you in the next one.